Welcome back. Now, in order to be listed on the JSE's main board, the minimum requirement is 15 million rand in profit and 500 million rand in share capital. A transition from the Alt-X to the main board is therefore a notable feat, especially for a SPAC. Medical cannabis group Cilo Cybin has defied the odds as one of the fastest companies to de-SPAC and will transition to a main board listing later this month. Gabriel Theron, founder and CEO of Cilo Cybin, joins us with more detail. Gabriel, thanks so much for your time this afternoon. And man, what a journey it's been, right? From a failed IPO in 2022 to listing as a SPAC on the Alt-X and now the move to the main board. Talk to me about, some of the strategic priorities that led to the transition onto the main board.
Good afternoon, and thank you for having me today. So yes, I think from a strategic point of view, our first goal was to get onto the JSE, or we'll call it the Alt-X, and we were financially backed by a Malaysian pharmaceutical to make that happen middle last year. And straight after that listing on the Alt-X, we started with the transaction to then acquire the operational entity, Cilo Cybin Pharmaceutical. At the time, Cilo Cybin Pharmaceutical did not qualify for a listing because it had no profits and no real revenue back then. And that's why we used the SPAC vehicle to basically get onto the JSE. During last year, business started coming in and we started growing significantly in Cilo Cybin Pharmaceutical, to a point where when we did the acquisition now that was voted through last week by the shareholders, the JSE also approved us to move off the Alt-X onto the main board, which is happening on the 29th.
And talk to me about what the business looks like now. What are investors tapping into? We can even go further to the group's cash position at the moment and debt profile.
So we're very lucky. I think the hard work has started paying off. We're in a position now after this transaction where we are cash flush, we have no debt, and we are profitable. So that puts us in a very unique position and also in a very strong position to now start growing the entity and expanding our international footprint. So that for the next 24 months is going to be the goal, to expand our markets and getting closer to the end user and not just being on the manufacturing side. So that is one of our major strategic objectives for the next 2 years. And I think for now the first bit is done, so the foundation is set, but now we still need to start building. So now we start building the business, but the foundations are there, the foundations are strong, and we're really in a very good position to now really grow this entity.
So yes, there was hard work, but there's even more hard work to come, right?
It only starts now.
All right. Talk to me about your expansion plans then, Gabriel. You just mentioned now that over the next 24 months, with the group being cash flush, you are looking at expanding your footprint. The group has been very vocal about getting into the European market. Do you still feel the same about the Australian market as well?
Yes, I think we've seen quite a big change in the Australian market in terms of the type of products that we are exporting to them. And with that, we also realized Australia is not the only place to be, and we need to diversify our risk portfolio slightly. And we are now looking into Europe to get our products into Europe. And that's going to be the focus for the next 12 to 18 months to get it into Europe. And having said that, we also needed to expand our own capacity in terms of what we can manufacture locally. Because it's one thing to open the market, but you need to be able to supply them.
Yes.
And we've now increased our processing and manufacturing capabilities, and that's something that we will definitely break to the shareholders and the public once all of that's been concluded.
And that brings me to my next question. From the time you entered the market to now, has there been any significant changes, any significant shifts, particularly in the medical cannabis market and the ability to access export markets as well, as that is also, one of your one thing that the group is trying to do?
Yes, so in terms of the license, it is for export only. So
Okay.
we're not really in the local market. We've got a small CBD line in the South African market, but our main focus, 99.9% of our business, is for export only. We have seen a shift. I think the biggest shift in Australia is prices are coming down, which is making it much more competitive. And the only way to really take advantage of that is to increase your ability to produce. So you need to increase the amount of products that you are able to produce as costs are coming down. If you position yourself as a very boutique company that's only specializing in certain products, you will feel a little bit of as the market gets used to paying less for certain things, you are going to struggle. So our approach was, let's scale the business. Let's get to a point where we can manufacture at scale.
Yeah.
To really get into those markets, and that's what we've seen. We've seen that the prices are coming down on a global level.
And just before I let you go, in terms of capex, you talk about scale, particularly around your manufacturing facilities. Is that what the group is going to be spending on, and perhaps increasing your manufacturing capabilities?
Yes. So we've already spent. That's already spent, paid off, and
Okay.
it's here and it's busy being implemented and installed. So yes, that is definitely where we saw, about a year ago, we saw that we have to get into that space and really scale. So we've done the capital outlay already, and it's already included in our financial position today.
All right, let's leave it there. Gabriel, thanks so much for your time and just taking us through the shifts and changes playing out at Cilo Cybin. Now, that was Gabriel Theron, founder and CEO of Cilo Cybin.